Here's the Elliott wave forecast for November 9th, 2011. I'll be looking at the long-term wave counts for the Dow, S&P, and Nasdaq. And if you're a perma bear, you won't like what you're about to hear because when I see these patterns, they occur 80 to 85% of the time. And on record, I've seen this pattern on record in the past 11 years. Every time I've seen this pattern on the long-term charts, the setup actually occurs. And we get not only a breakout, but a 1.618 times wave 1 move. So basically on the Dow 2-month chart, we got wave 1, which is almost 2,000 points. And you got a wave 2 that retraced back to near the previous 4. That'll be wave 1, wave 2. And if this is a third wave pattern break, if we break above 12,275, this is wave 1, wave 2, wave 3. And the third wave is 1.618 times the 2,000 point move almost in the Dow, which I think is like 1,900 points, times wave 1.618 times wave 1. The highest target I have for the Dow would be as high as 14,700. And it's not a crazy target because, again, the Dow traveled almost 2,000 points off the lows from 10,400. And we got a retracement wave 2 and a pattern break wave 3. So if we take out 12,275 in the coming week or coming days, again, the highest target I have for a third wave would be as high as 14,700. And it's not a crazy target because every time I see these patterns develop like this on a long-term chart or a 2 or 3 month chart like this, the third wave targets actually occur 80% to 85% of the time on record from what I've seen, like on my website. If you look at my record. I'm not kidding. And when you see it so clear cut like this, like Nasdaq rallied 450 points almost off the lows, almost 450 points off the lows, retracing a wave 2, and broke out in pattern break wave 3. It hasn't broken out yet, but 2752, if that breaks, that would set up a third wave. And if the third wave is 1.618 times wave 1 times a 450 point move in the Nasdaq, highest target I have would be 3280. 3280. That's 1.619 times wave 1 plus the bottom of the wave 2. And it's not a crazy target because we got a wave 1, wave 2. And the wave 1 was really large, and we got a wave 2 and a retracement wave 2. And then now we're on a pattern break. Whenever I see this pattern, guys, the full target happens 80% to 85% of the time. If you look at my PDFs from stocks in, I believe it's 09, 2010, and 2006, I believe. I did long-term counts for in 2007, 2008, which were correct as 75 to 85% of the time, I believe. I haven't checked those 2007, 2008, but I didn't do one 2008. But I did one 2007. I knew there was a big drop coming, and I called the. Actually, it was the middle of 2007. Anyway, that's besides the point. Point being is that every time I've seen this third wave pattern break occur, I get the full upward 3 target, and it usually hits. So, I'm not even kidding. This is it's so pure. It's like wave 1, wave 2, wave 3. And you take out 2752. Highest target I have would be 3280. The Nasdaq. For the S&P, there's a chance this is a 4, but I'm looking at this as a wave 2, a quick 2 before a 3. And if this is one of those quick 2s that goes back to the previous 4, and this is a third wave pattern break, and the third wave travels 1.618 times wave 1 times the 220 point move in the S&P. If it travels 1.618 times wave 1, the highest target I have would be as high as 1570 in the S&P. That'd be wave 1, wave 2, wave 3. We need to take out 1292 and then obviously 1370 first, but if we take out 1295 approximately, that would be 0.76 of the entire drop from the 52-week high to the 52-week low. And we're right on the edge of really exploding to the upside. I'm talking like big third wave that takes out new 52-week highs and takes out the 2007 highs as well. So, I mean, I'm not saying that this is 100% accurate, but it's pretty close. It's like wave 1, wave 2, wave 3, okay? It's like, I literally have made these I've made hundreds of charts of like 2-3 month charts, 6 month charts, 3-year chart, 5-year charts, and when you get this pattern, wave 1, wave 2, wave 3, and it occurs 80% to 85% of the time. I'm not kidding. From my record, and I'm seeing it now, so I'm not. I wouldn't ignore this video if I was a bear, because I'd be scared out of my mind if I knew that this thing was going to go to 1570, and I can continue to add to my short position. Why would you do that? This is a setup for a third wave. And, okay, the worst case scenario is that this is just a fifth wave, and this is a fourth wave. But if there's a possibility that he could travel 300 points from here, from an S&P, 300 points at least, that's a scary thought. Because not only would you go bankrupt pretty quickly as a short and keep on adding short positions here, it actually hurt a lot. I won't say you go bankrupt, but the margin call will be pretty big if you keep on adding. But all I'm saying is that this it's not 100%, but it's pretty close. Wave 1, wave 2, wave 3. Do not ignore this pattern, because the third wave is sitting just around the corner, and it looks so clearly defined to me. So I'm not. I really would like to say this is 100%, but 85% is pretty scary when it comes to calling a chart pattern correctly. That's a wrap.